Hey everyone, my name is Ben, the founder and managing director of Collective Shift, a crypto research education platform. Today I'm running through with you on the Stockhead V conference for crypto, how to structure your crypto portfolio. So one of the top questions we get from our members and the general audience is, I'm just getting into crypto or I'm already in crypto, how should I balance my portfolio? So I'm going to walk through today our strategies, what I personally do, and also split it up into sort of beginner, intermediate, and advanced based on what level of investing sort of capabilities you're in crypto. So first of all, I guess our macro strategy. So I break up the four types of assets within crypto, the different verticals you can call them, into Bitcoin, Ethereum, altcoins, and NFTs. We tend to say that, predominantly what you should hold in your portfolio is about 50% worth of Bitcoin. Bitcoin is the blue chip asset. We think it's got the longest upside potential. It's also probably the less risky, the most risky assets. So we tend to hold at least 50% of our portfolio in Bitcoin. Then hitting into Ethereum. Ethereum is a platform basically that you build applications on top of, and we think Ethereum's got a great future. Ethereum's also got a lot of competitors, which a lot of people like, Cardano, Polkadot, a few of those sort of other blockchain platforms. You can start to, diversify into those other sort of, platforms. I personally am very bullish on Ethereum, so don't hold any of the other platforms, but certainly depending on what you're interested in, you can do that. Altcoins, this is where I made most of the money in my portfolio over the last few years, investing in some of the early stage opportunities. The altcoins are basically anything that's not Bitcoin. And for me, investing in some of the sort of the 10, 20, $30 million market cap projects give the biggest upside potential. It also has the highest risk. I've lost a lot of money as well in altcoins. I look at altcoins and sort of the early stage investment opportunities as something like a solo VC. So you're kind of sprinkling your capital across different smaller cap assets, and hopefully, one or two will hit and you'll earn that money back and also most of your gains. 3 or 4 will be sort of the break even, and then you're going to get a few that also go to zero, and that's just the part and parcel of investing in some of the altcoins. NFTs, for me, I'm just like waiting and seeing. I think NFTs have a big potential moving forward. I think we're probably seeing the peak over the last few months. There was significant growth in the start of sort of Q1, Q2 in the NFT season. I'm waiting and seeing, and hopefully there's going to be a little bit more opportunity to invest in some lower price NFTs moving forward. But that's sort of the macro strategy. Beginner portfolio, I recommend to all my friends and family and all of our members, if you're just starting out, just to start with Bitcoin and Ethereum to begin with. Just wrap your head around everything you can. We've got a bunch of resources on our website on Collective Shift where you can learn about Bitcoin, learn about the basics, just really get that fundamental knowledge before sort of heading into the more risky assets. We also recommend a dollar cost average. So rather than piling in, all your savings at any one time, crypto is inherently volatile. So you can start to lower that risk by investing a portion of your capital over a consecutive number of weeks. Something I did in the recent years is take a percentage of my salary and buy Bitcoin every time I get paid. So that's a really basic way just to start to accumulate. As you're heading into the intermediate portfolio, you're starting to get into sort of the top 100 sort of more diversified assets. I've got an example there of some of the assets that we think are good to hold in your sort of intermediate portfolio. You certainly should be starting to understand, DeFi and altcoins at this point in time, getting into sort of the NFT space as well, and starting to diversify outside of just Bitcoin and Ethereum. And then advanced portfolio. So this is when you're starting to get into some of the more DeFi protocols. We recommend you really wrap your head around some of these products and start to use them yourself. You start to feel, a sense of ownership and understanding of these products. One thing we see time and time again is investors not knowing what they're bought into, meaning that when you see bear periods, which do happen in crypto, prices go down. A number of times crypto's gone down 60, 70, 80%. If you don't understand what you're buying, and you don't know why things are going down, you don't understand the landscape as a whole, what we tend to find is people sell on the way down. People buy on the way up because it's an emotional market. They see people making money, so they buy on the way up and they sell on the way down, which is the complete opposite. what we recommend is really learning about the space. Head over to our website, as I said, and there's a bunch of resources you can get on there and start to read up on this space. Early stage investing strategy, I really see this, and this is sort of a strategy that we've used at Collective Shift, and what I have done personally to make a lot of the gains in my portfolio. You start to think of yourself as a sort of solo venture capitalist. For the first time ever, crypto is an asset class which you can get access to small market cap companies without needing to participate in a seed round or a Series A or be a part of a fund. So think of yourself as a VC capital. Understand how much capital you want to allocate. It might be $100,000 for the year, and then look and be strategic in your investments. Don't go all in on one project. Scatter it like seeds across 10 different assets, for example, over a 12 or 24 month period. And you'll start to see those results over a 2 or 3 year period. You're going to lose some money. I've lost a lot of money in investing in projects. That's just a part and parcel, as I mentioned, of early stage investing. But you're going to get those one or two that are the 10, the 15, the 100x in returns, and that's what you're after as an early stage investor. Looking forward, I think for the rest of the year, I'll be accumulating more Bitcoin. I'm kind of waiting and seeing on the NFT space. I think we've potentially hit a bit of a peak, and I think we'll see some opportunities pop up heading into Q4 and Q1 next year. I'm still looking at some early stage crypto opportunities. We've just found one we've just invested in at Collective Shift, and we've just launched that to members. So there's still some really good opportunities out there. As we go into a bear market, there's going to be a lot more opportunities when people are being fearful of the markets. That's the time to be greedy, as Warren Buffett says. That's where we're going to see the most potential. So I'm really excited about that. And just holding long term, I think Bitcoin's got a lot of upside potential. I think we're going to see a lot of gains and a lot of long term increases over the next few years in Bitcoin. To wrap up, just a few quick tips and tricks investing into crypto. Don't FOMO in, so that's basically fear of missing out. You're going to see a lot of gains. You're going to talk to your mates. You're going to see people online that made a lot of money in crypto. Don't pile in at the top. It's usually when you start to hear these sort of success stories, that's usually the wrong time to buy, so don't FOMO in. Learn about what you're buying before you buy it. Really understand the asset before buying it. That'll help you with the long-term conviction, and if price decreases, it'll allow you to really see that as an opportunity, not a fear story. Keep records of your investment for tax. A lot of our members, coming into the space, get caught up at tax time because they haven't properly recorded their investments. So keep a spreadsheet. There's a few tools you can use as well. We've got on our website, apps and things like that, which you can use to track those investments. Dollar cost average, as I said, don't put in more than you're willing to lose. Please don't, put in, all the savings or like taking out any loans. We don't recommend that at all. Only put in what you're willing to lose. Take profits on life-changing investments. When you've made life-changing amount of money, take profits. There's nothing better than, taking a bit of profits and, going on a holiday or, buying a new car or putting a deposit on a house. Take those profits, all right? Don't think because you've just done 20x, you can do another sort of like 3 or 4x. In my opinion, that's not worth it. Take some chips off the table. Don't become addicted to checking your portfolio. It's super unhealthy. A lot of people do it when they first get in the space. It's the dopamine. The prices go up, prices go down. It can really affect your health and your sort of mental state. So it certainly affected me in the early days. I've now limit myself to checking the pricing. I'm a long-term holder, so there's no need to check it every day or 10 times a day. And the last one, which is the biggest thing, be greedy when people are fearful and be fearful when others are greedy. That is the biggest opportunity. And it's even more so in crypto because it's very emotional. It's very volatile. Those opportunities are going to come when no one else is looking. Thanks very much. I'm Ben, as I said, from Collective Shift. If you're after any sort of research, investment opportunities, things like that, opinion on the market, we do that. That's our bread and butter at Collective Shift. We put together a team of experts to help you navigate the market. So head over and check us out. Thank you. Bye.